Hey everyone, today is March 23rd, and today we're going to talk about the price of gold, whether gold has bottomed and we're going to go higher, or whether gold will continue to go down more, and why is it going down. Before we begin talking about this discussion, please read this disclaimer, and you can pause this video as you read it. Okay, so yesterday we talked about how gold has been in a downtrend for the better part of a year, and a lot of that has to do with just the strength of the dollar recently, just relentlessly ripping higher and putting a lot of downward pressure on gold as it continues to go down, right? And a lot of that has to also do with rising treasury yields. We've seen treasury yields rise since August of last year, 10-year, 30-year, and that's putting a lot of pressure on gold as well, right? Here's in August we peaked, and we've just been in a downtrend and really just breaking below these moving averages. They all are postulated negatively right now. So the question is this going to keep going lower, or are we trying to find a bottom right now? And I think that if you look at the technicals, giving benefit of the doubt to the bears, I think in this case, we have to assume that this is going to keep going lower, right? Because we keep making lower lows, we keep making lower highs, right? Lower highs and lower lows. And until we have a change in the trend, we have to start to put in higher lows, higher highs, right? We have to just assume that this is going to keep going down. And yesterday we talked about how this Fibonacci level is a line of defense, right? We attempted to break through here. We attempted to break through here, but we rejected. Attempted to break through here, but we rejected. And then now we try to find support here. Rejected, came back up. This was turned into resistance, right? Once you flip support into resistance, that's bearish. We failed to stay above, and now we're closing below today. And that's not good. This is probably going to go down low. And we'll have a chance to see if we can put in a double bottom and continue higher, or if this is going to just continue to go lower. We also talked about how in the past we've had pullbacks that were a lot deeper than this, right? We talked about how in the past we had a pullback that was around 34%. So if we just have a similar pullback as we did in 2008, well, that would take us all the way down to 1371, right? I mean, that's a pretty deep pullback. I don't know if it's going to go down that much, because 2008, remember, that was the financial crisis, so you had that really accelerating the downside. But I think with gold, I think a lot of what's happening is recently today, Jerome Powell and Janet Yellen, they had a joint testimony today when they talked more about how inflation has been rising recently. We saw in the chart, right, how inflation has been unexpectedly rising a lot more than people expect, pushing the treasury yields higher, and those rates and the stronger dollar has been putting a lot of downward pressure on gold. And now the Federal Reserve, or Jerome Powell, the chair of the Federal Reserve, basically said that this new stimulus package that they just passed recently, 1.9 trillion. And by the way, they're thinking about pushing another 3 trillion stimulus, or not stimulus, infrastructure package that's going to focus on rebuilding infrastructure and also on climate change. So that's going to add more. That's just more money printing, right? It's going to expand the money supply and devalue the currency of the U.S. currency, fiat currency, even more. But what might seem like something that, hey, this will cause people to want to buy gold, right? But look at what he says here. Jerome Powell said he doesn't expect the 1.9 trillion stimulus package will lead to an unwelcome increase in inflation, but he emphasized that the central bank has tools to deal with rising price pressures if necessary. So what is he implying by this? What is he implying by the tools to deal with rising price pressures if necessary? He's implying interest rates, right? Raising interest rates is one of the ways that the Federal Reserve can dampen inflation. So if you raise interest rates, that's going to be bad for gold, right? Because the opportunity cost of holding dollars versus gold is going to be a lot higher. And that's why we're seeing the dollar right now just finding strength and potentially following a similar pattern that it did in 2018. This is why I drew the box, right? To give you an example of very similar scenario playing out. This thing can rip higher. That's going to put a lot of downward pressure on gold, right? So look at how gold performed in 2018. We were down, just plunged down, right? Meanwhile, the dollar ripped higher. So if we see this thing go up, that's going to put a lot more pressure on gold to go down, right? So where are our next lines of defense? Obviously, we have to defend this Fibonacci level here. If we don't defend this level, it's going to go down more. And we talked yesterday about how this weekly 100 simple moving average line, which right now is at around 1660, but this is a weekly chart. So as this price moves down, probably coming down lower, we're going to see this moving average move up. And somewhere they're going to meet, probably around 1680. So if we do find support on this 100 moving average, we might be able to put in a double bottom. And I think that to me is the best scenario. If we can put in a double bottom, I know the lines look kind of messy, but if we can put in a double bottom, right? Come down, put in a double bottom, and break above, defend this Fibonacci support level, and just break on higher, then there's hope for gold. You know, we want to put in higher lows and higher highs. So we want to reverse this trend, because right now we're just making lower lows, lower highs, and lower lows. So basic technical analysis, right? So that's gold. Right now, you just have to give the benefit of the doubt to the bears that this is going to continue lower until they prove the bulls can push the price back up and reverse the trend, making higher highs and higher lows. Yeah, so that's gold. Silver, very disappointing, because yesterday we were talking about how silver looks more promising than gold, which is very interesting because usually silver is weaker than gold, right? Silver was more volatile and it usually follows gold. So when gold's going up, silver will be a lot more aggressive on the upside, as we saw last year, this huge spike up. But when gold goes down, generally silver will go down even more. But silver, technical analysis, technical structure wise, has been holding up stronger over the last 6 to 7 months. But now it's starting to break, right? We're making lower highs, and that's not good. We have to defend. We have to defend $25. We have to defend this level. If we don't, this is just going to roll over, fall down here. Our next line of defense is here, this 200 moving average on the daily chart. If we don't hold this level, this is our only chance to break up higher. We have to make something like this. That way we can continue those higher lows, right? If instead the price continues to roll over down, breaks, it doesn't hold the 200-day, it just comes down lower, then our next line of defense is going to be $22 here. And of course, we don't hold that, it's just going to plunge lower. So silver overall is looking stronger than gold, but it's in danger right now, right? We had a sharp plunge today, a lot more than gold, which it seems more right now in terms of what it usually does, like following gold, but more volatile. But it's just very disappointing to see that silver's coming down. So hopefully it can hold this level and push up higher. So that's it with gold and silver today. It's not looking good in the short term and in the medium term. Of course, there's always a chance that we can hold this level and push up higher, right? And there's a lot of price action around this level here too. So hopefully that maybe consolidate, push higher, and continue higher like that. Same thing with silver. Hopefully this ends up being a bear trap and we push higher, defend this Fibonacci level, maybe trend sideways in this channel before pushing higher. Otherwise, we have to give benefit of the doubt to the bears, at least in the short to medium term. So we'll see how the dollar plays out. Maybe this thing won't break through this box and it'll come down. And that's going to take a lot of selling pressure off of the metals and give gold and silver a chance to push higher. So anyways, that's it for today. Thank you for watching this video. Please like this video, leave a comment below, and subscribe for updates. Thank you, and I appreciate your support.